Greetings, financiers and future moguls. Welcome to InvestorWeb, your trusted guide to the world of finance. We're here to simplify complex financial topics, making them accessible and understandable to all. We strive to provide clear, concise and comprehensive insights, helping you make informed decisions and navigate the financial landscape with confidence. Today we delve into a topic that often causes furrowed brows: inflation. But hold on, there's more to it than you might think. Inflation, a word that often sends chills down the spine of investors and general public alike. It's that menacing spectre that looms over the economy, seemingly always ready to gobble up our hard-earned money. But what exactly is this economic phantom we call inflation? In its most basic form, inflation is the rate at which the general level of prices for goods and services is rising. Now, if you're a regular shopper, which most of us are, you've probably noticed this. The price of bread, milk, petrol, even your favorite chocolate bar, it all seems to be a little more expensive than it was a year or two ago. This is inflation at work, slowly but surely eroding the purchasing power of your money. But why does this happen? Well, there's a myriad of factors at play here, from government policies and global events to supply and demand dynamics. Sometimes it's as simple as too much money chasing too few goods. Now, it's easy to see why inflation could be viewed negatively. After all, who wants to pay more for the same goods and services, especially when wages aren't rising as fast? This eroding purchasing power can make it harder for us to maintain our standard of living, and for investors it can eat into the real returns of their investments. In fact, inflation is often painted as the financial boogeyman, the unseen force that can wipe out savings and destabilize economies. It's this perception, this fear, that can lead to panic in the markets. But here's the thing about fear. It can often cloud our judgment, prevent us from seeing the whole picture. Inflation, like many things in life, is not purely black or white, good or evil. It's a complex economic phenomenon with both positive and negative aspects. And yes, you heard that right. There are positive aspects to inflation. There are benefits that can occur often unexpectedly, even in an inflationary environment. However, inflation isn't the financial boogeyman it's often made out to be. There are unexpected benefits to it. So let's turn the lens around and explore what some of these benefits might be. Let's delve into the silver lining of inflation. Yes, you heard it right, benefits of inflation. It might seem counterintuitive, especially when we're often told inflation is an economic boogeyman. But like many things in life, it's not entirely black and white. Inflation has its silver lining too. Let's start with one unexpected benefit: stimulating economic growth. Moderate inflation can be a catalyst for this. How so, you might ask? Well, when prices rise at a moderate rate, it can encourage spending. People tend to buy goods and services now rather than later in anticipation of future price increases. This increased consumer spending can spur businesses to produce more, leading to higher GDP growth. But remember, the key word here is moderate. Too high inflation can lead to uncertainty and instability, which is definitely not good for the economy. It's like adding spices to your food. A little can enhance the flavor, but too much can ruin the dish entirely. Now let's move on to another benefit. Inflation can reduce the real burden of debt. Debtors, or those who owe money, can actually benefit from inflation. This is because the value of the money they have to repay is eroded over time by inflation. Think of it as a seesaw. On one side we have the value of money, and on the other side we have the amount of debt. As inflation rises, the value of money falls, but the amount of debt remains the same. This means that in real terms, the value of the debt has decreased. Borrowers end up repaying their loans with money that is worth less than when they borrowed it. Of course, this isn't great news for lenders who get repaid with money that has less purchasing power, but that's the very nature of inflation. It's a balancing act with winners and losers. So next time you hear the word inflation, don't immediately jump to negative conclusions. Inflation is not all gloom and doom. It is a complex phenomenon with a silver lining. Now, let's shift our focus to investments. How does inflation impact investments, you ask? Well, it's all about understanding the dynamics of the market. Inflation, as we know, is the rate at which the general level of prices for goods and services is rising. This, in turn, erodes purchasing power, which is a risk for investors. However, not all investments are created equal when it comes to inflation. Consider this: some investments, like bonds, are more susceptible to inflation. Why so? Because the return on these investments is fixed. When inflation rises, the real rate of return can be eroded. This is why bonds are often less attractive during periods of high inflation. On the other hand, there are assets that can serve as a hedge against inflation. Real estate, for example, tends to increase in value over time, even as inflation rises. This is because the price of property and rent can often be adjusted to match inflation. So if you're a property owner, inflation might not be your worst enemy. Equity investments like stocks can also provide a hedge against inflation. Companies can raise their prices to adjust for inflation, which can lead to increased revenues. These increased revenues can then translate into higher stock prices. So, owning shares in companies can be a strategic move in times of inflation. Commodities like gold and oil are another type of investment that can benefit from inflation. These resources are finite in nature, and as such, their value tends to increase when prices are rising. So, how can savvy investors use inflation to their advantage? It's all about diversification and understanding how different investments react to inflation. A well-diversified portfolio can help mitigate the risks of inflation and potentially provide a return that outpaces it. Remember, inflation isn't necessarily a bad thing for investors. In fact, inflation can be a catalyst for growth in certain sectors. It's all about understanding the landscape and making strategic decisions. Inflation, when navigated strategically, can open up avenues for lucrative investments. Before we wrap up, let's quickly revisit the key points discussed today. We've delved into the realm of inflation, a term often met with furrowed brows and concern. It's true, inflation does mean a general increase in prices and a fall in the purchasing value of money. But herein lies the silver lining we've been exploring today. Inflation, surprisingly, has its own set of benefits. It can stimulate economic growth by encouraging spending and investment. When people expect prices to rise, they're more likely to purchase goods and services sooner rather than later, thus driving demand and economic activity. The same principle applies to businesses who may opt to invest in new projects or expansion plans in anticipation of higher prices. Furthermore, inflation can help reduce the real burden of debt. As prices rise, the relative value of money falls, which can make existing debts less daunting in real terms. This unexpected benefit can provide a vital lifeline for those grappling with significant liabilities. Lastly, we've examined how inflation intertwines with investments. It may encourage investors to explore growth-oriented assets like stocks, as bonds and cash may lose their real value over time due to inflation. So while inflation is often viewed with a degree of trepidation, it's important to remember that it's not all doom and gloom. In fact, if navigated carefully, it can present opportunities for both individuals and businesses. Remember, in the world of finance, every cloud has a silver lining, even inflation. That brings us to the end of this enlightening journey. We've discovered that inflation, often seen as a financial foe, can indeed be a friend in disguise. We've learned about its unexpected benefits, its silver lining, and how it plays into investment strategies. But the learning doesn't have to stop here. There's a world of financial wisdom waiting for you right here on Investor Web. So if you haven't done so already, do hit that subscribe button. Not only will you be kept in the loop with our latest content, but you'll also be joining a community of savvy investors just like yourself. Don't forget to give this video a thumbs up if you found it insightful. Share it with your friends, family, or anyone you believe could benefit from it. And, of course, we'd love to hear your thoughts, so don't hesitate to drop a comment below. Remember, the key to financial success is knowledge. Stay informed, stay invested. Until next time, this is Investor Web signing off.